Hey everyone, welcome back to Corporate Decoder, the place where we expose the hidden numbers behind major companies. Today, we're diving deep into Xinxu Copper Industry Technology Limited's SEC filing. And let me tell you, it's a roller coaster of financial data, market shifts, and some eyebrow-raising risks. Stick around, because understanding this filing could be crucial if you are looking at the copper market or China-based companies. Before we dive in, if you love getting these unfiltered looks into corporate filings, do us a favor, hit that subscribe button and the notification bell. Also, we've built an amazing community on Discord where we break down these documents together, so please join us there. You can find the link in the description below. Alright, so Xinxu Copper Industry Technology Limited, a company based in the Cayman Islands, but with most of its operations in China, is filing a post-effective amendment to its Form F-1. This essentially updates their IPO registration statement, and the key takeaway here is that while they already filed this before, they're adding in their latest financial statements for the fiscal year ending June 2025. Importantly, they state no securities have been sold yet under the original filing, but this amendment is crucial for moving forward. First off, let's look at the big picture. Xinxu is looking to raise funds through an IPO offering 1,500,000 ordinary shares, with an estimated price between $4 and $5 per S-share. They also mention a resale prospectus for an additional 39,000 shares from selling shareholders. This means a total of over 5 million shares could hit the market, which is a significant chunk. They're aiming for a NASDAQ listing under the ticker symbol XXC, and this listing is a hard requirement for the offering to go through. Now, let's talk about what Xinxu sees as their strengths. They highlight strong research and development capabilities, long-standing customer and supplier relationships, and an experienced management team. They've been investing in R&D, resulting in 6 registered patents, and have a team of 43 R&D personnel as of June 2025. They also emphasize their commitment to product quality, holding ISO 9001, ISO 14001, and IATF 16949 certifications. These are all good points, but the real test is in the numbers and the risks. Let's get into the financials, specifically the statement of operations for the years ending the 30th of June 2025 and 2024. First, revenue for the fiscal year ended the 30th of June 2025. Total revenue was $113.3 million, an increase of about 7% from $105.8 million in 2024. This growth comes from increased sales of COP per bar products, particularly those used in new energy vehicles. That is a positive sign, showing they're adapting to market trends. However, their cost of revenue also went up proportionally from $101.8 million to $109.2 million. This means their gross profit remained fairly stable at around $4.1 million for 2025, up slightly from $4.06 million in 2024. The gross profit margin actually dipped slightly by 0.22%, which they attribute to fixed pricing on new energy vehicle orders, while raw material costs went up throughout the year. This is a classic challenge in commodity-based businesses managing margin swings. Looking at operating expenses, their general and administrative costs decreased slightly by about 8.78% to $1.61 million in 2025, from $1.76 million in 2024. They mentioned stronger oversight and control over expenses like entertainment, so that's them tightening the belt, which is good to see when margins are tight. Selling and marketing expenses, however, jumped significantly by 62.39% to $355,146 in 2025, mainly due to increased shipping costs and higher salaries for their sales team. This makes sense if they are trying to expand their sales network, but it is a cost to watch. Then there is R&D expenses, which increased by about 23.63% to $1.36 million in 2025. This is a notable increase. They're investing more in new energy-related projects like 3D bending and powder coating. This aligns with their strategy to focus on higher margin products for electric vehicles. Interest expenses also crept up by about 20.40% to $472,000, likely due to increased short-term borrowings. But here is where it gets interesting. Other income net shot up by an incredible 289% to $1.25 million in 2025 from $319,000 in 2024. This huge jump is due to increased government grants and VAT refunds, primarily related to their new energy products. While this boosted their bottom line, it is important to remember that government grants aren't recurring revenue. All these factors combined led to a net income of $1.3 million in 2025, up from $841,000 in 2024. That's a good improvement, but a significant portion of that boost came from those one-time government grants. Now, let's talk about the big elephant in the room: liquidity and going concern. Their financial statements contain an explanatory paragraph raising substantial doubt about their ability to continue as a going concern. As of the 30th of June 2025, they had negative cash flow from operating activities totaling about $4.8 million. They also had negative working capital and an accumulated deficit. They're taking steps like negotiating bank facilities, controlling costs, speeding up production, and enhancing sales. But the auditor still felt the need to highlight this significant uncertainty. This is a major warning sign for investors. While they believe they have enough resources for the next 12 months, the fact that they're raising money through an IPO and still have such a significant working capital deficiency is something to be very cautious about. Let's shift gears to related party transactions. They've detailed several dealings with entities controlled by management or their families. For example, they pay Wuxing Kaishan Surface Treatment Company for tinning services and Wuhurulian Ecological Agriculture Company for hospitality. They also get logistics services from Xinxu Logistics. Importantly, Xinxu, their CEO and major shareholder, has provided significant working capital through personal loans that are interest-free and due on demand. As of June 2025, the company owes him over $6.2 million. Similarly, Onhui Langmao and Onhui Jingwei. Companies linked to employees also provide working capital. While these might be necessary for operations, anytime a company relies on personal loans from insiders, it's a flag to watch, especially regarding the transparency and alignment of interests. The fact that they could owe over $6 million to their CEO is pretty substantial. The risk factors section is always a goldmine, and Xinxu is no exception. A major one is the Holding Foreign Companies Accountable Act, or HFCA Act, which could lead to US exchanges delisting their securities if their auditor cannot pass PCAUB inspections for a specified period. Their auditor, Fortune CPA Incorporated, is US-based, but China's regulations still pose a risk. They also point out the significant political and economic risks of doing business in China, including regulatory changes that can happen quickly and with little notice. Then there are the specific risks of being a Cayman Islands holding company with PRC operations, including potential issues with capital conversion and dividend transfers due to PRC government controls. They even mentioned the potential for their securities to be prohibited from trading under the HFCA Act if their auditor isn't fully inspectable. This is a big deal and could severely impact investor liquidity. Diving into their business, Xinxu produces and sells copper and copper alloy products. Their main revenue driver has historically been reselling electrolytic copper, about 77.7% of revenue in 2025. However, they've strategically reduced this low-margin business to focus on higher margin products like soft and hard connection copper bars for electric vehicle battery packs. This shift is evident in their T2 cop per bar product revenue, which jumped from $4.1 million in 2024 to $16.1 million in 2025. That's a 3.8 times increase, showing strong progress in their strategic pivot. They also sell T2 tin-plated copper bars and aluminum bars. The EV battery market is a growing sector, so this strategic shift makes a lot of sense. But it also means they're becoming more reliant on the booming, but also volatile EV market. Now, let's look at the auditor's report, Fortune CPA Incorporated. Their auditor also highlights the substantial doubt about Xinxu's ability to continue as a going concern due to negative cash flow from operations, negative working capital, and an accumulated deficit. They did perform audit procedures, reviewing working capital, liquidity ratios, inventory plans, and financing arrangements. This going concern issue is serious and underscores the financial fragility they are facing. Looking at the consolidated balance sheets, total assets grew from $31.8 million in 2024 to $37.3 million in 2025. However, their current liabilities also increased significantly, primarily due to a spike in short-term borrowings, which went from $9.7 million in 2024 to $14 million in 2025. Their total shareholders' equity also increased, but the bulk of their liabilities are short-term, which can create a liquidity crunch if not managed carefully. On the income statement side, the net income for 2025 was $1.3 million. But remember, that's after a significant boost from government grants and VAT refunds, which totaled over $825,000. Without those grants, their net income would have been much smaller, closer to the $500,000 range, which puts that revenue growth into perspective. The cost of revenue also rose, indicating that increased sales are coming with increased costs. The cash flow statement paints a grim picture for operations. Net cash used in operating activities for the year ended the 30th of June. 2025 was a negative $4.8 million. This is a big jump from the positive $3.3 million in 2024. The statement notes a huge increase in inventory by about $7.1 million, explained by increased orders, new production lines, and rising copper prices. While increased inventory can signal growth, the sheer size and the negative operating cash flow are concerning, especially when combined with the going concern warning. Their investing activities also show heavy spending on property and equipment, about $640,000 in 2025. Financing activities show a net cash inflow of $5.1 million in 2025, mainly from short-term borrowings and money from related parties, which suggests they are relying on debt and related party funds to stay afloat. Despite these financial pressures, Xinxu has a clear strategy. They aim to strengthen their industry position by gaining market share, upholding product quality, innovating through technology, expanding their sales network, and attracting talent. They are actively investing in R&D for new energy products and plan to use IPO proceeds for equipment, facilities, sales expansion, and potential acquisitions. This shows ambition, but it is a high-stakes game given their current financial situation. It is worth noting that Xinxu is an emerging growth company and a foreign private issuer. This means they can take advantage of some flexibilities in reporting, which is common for companies of their size and origin going public. They are also considered a controlled company due to their CEO's significant shareholding, though they say they don't plan to use the governance exemptions. So what's the verdict on Xinxu Copper Industry Technology Limited? On the positive side, they are transitioning to higher margin products in the growing electric vehicle sector, have a dedicated R&D team, and hold relevant quality certifications. They also secured a government loan aimed at supporting their IPO, which shows some level of local backing. However, the financial health is a major concern. The negative operating cash flow, significant increase in debt, and the auditor's explicit warning about their ability to continue as a going concern cannot be ignored. The reliance on insider loans and government grants also adds layers of risk. While their strategic pivot towards EVs is promising, it's a long road ahead to prove they can consistently generate profits and manage their debt effectively. For potential investors, this filing screams caution. The risks associated with China's regulatory environment, financial stability, and market volatility are substantial. It's a company poised for growth in a hot sector, but currently teetering on the edge financially. Alright, that's our deep dive into Xinxu Copper's latest filing. What are your thoughts on their strategy and those going concern risks? Do you think they can pull it off? Let us know in the comments below. If you found this breakdown valuable, give us a thumbs up and make sure to subscribe and hit that notification bell so you don't miss our next corporate decode. And remember, join our Discord community for more exclusive insights and discussions. Thanks for watching, and we'll see you in the next one.